The Bank of America Institute released May's Consumer Checkpoint report just moments ago. Credit and debit card spending year over year actually dropped 1.2% compared to April of last year. This is the first negative reading since February of 2021. And joining us right now with more is Liz Everett-Chrisberg, who is the head of the Bank of America Institute. And Liz, thanks for coming in today.
Of course, great to be here. Thanks for having me.
You're an emoji expert.
Compared to you, yes.
Yeah.
Compared to you, exactly. It's all relative.
Liz, this is a big deal. The idea that the number's actually down for the first time since February of 2021. What happened?
Well, I think there are a couple of things to look at. One, you've clearly got unfavorable base effects here. And if you look at the numbers on a seasonally adjusted month-over-month basis, they actually were still positive. But there are some signs of softness if we dig into the data. And in particular, if we look at the sectors and how they performed. We have been talking for quite some time about how it's been a services story. Services are carrying us through. Mm-hmm. But if you look individually at what was happening, the moderation was really broad-based across the board. And it was led by a decline in airlines. So airline growth, spending growth, had been above 5%. It's now below 1%. Lodging, I mean, if you see airline going down, lodging was down 4.6%. So we're really not seeing the services carrying the day the way we had.
Should we tie this into what we just heard from Airbnb, that they saw a big drop too?
I saw that. I think that certainly fits in with the data that we're seeing, and we're looking at it obviously on a real-time basis, looking at the data through April, but that certainly seemed consistent.
You get the sense that this is people not being able to work from home anymore or work from anywhere anymore, or is this more of a case where the consumer is actually really starting to feel a pinch?
Well, I think, you kind of hit the nail on the head here. You can't understand spending without understanding the labor market, right? And what we do at Bank of America Institute isn't just look at the spending data from the bank, but we look at the consumer holistically. And one of the things we can do is understand income flows. So direct deposit, after-tax income, bonuses, other sorts of income coming into the accounts. And what we found there is, we saw last Friday, the labor market seems strong, and it is overall, and we're seeing that overall. But if you break it down by income group, the higher income consumers' inflows actually contracted last month for the second month in a row. So lower and middle income families, they're still getting income gains of 2 to 3%. But the higher income households, their income is decreased by 1.3%. So that actually ties in also with the decline in services, because if you think about it, the top two quintiles, so the top 40% of American households, drive over 60% of spending. And where are they spending it? Generally on services, if they're pulling back.
That tells you a lot about the economy and the broader issues. I guess the one bright point in all of this, the silver lining, is that the savings rate is still pretty decent.
Absolutely. So we always look at the savings rate. Are people running out of money? Are they putting more on their credit cards? And when we look at that, savings continue to be significantly elevated relative to where they were before the pandemic. So across all income cohorts, deposit balances are up between 40 and 70%. 40% for the highest of income households, so those making above 250, but almost 70% for those making 50,000 or below.
We've heard for a long time that extra savings is going to run out at some point, that it was because a lot of people were getting money from the government during COVID. When do you think that money runs out?
So we continue to look at this, and we had seen that excess savings really decline. But if I look really since the end of last summer, it's been relatively flat. In fact, this month we actually saw an uptick for most households, but it was really more related to the seasonal with tax refunds coming in more than anything else. What's interesting, though, is if you ask the consumer, and our colleagues who run the Market Landscape Insight Survey ask the consumer, not just our consumers, but non-bank consumers too, do they think that their rainy day fund will last them 6 months? We actually saw that tick down slightly in April. Not a lot. And interestingly also, that was very consistent, the reduction across all levels of income. But the consumer is clearly thinking, well, I think they're thinking, that inflation's having an impact. It's eroding their spending power. So we're all paying attention at 8:30 to see how that continues.
Well, you must know.
What the CPI number is?
You must know whether it's going to be hot or cold. You must have an opinion.
On what? Well,
hot or cold. Hot or cold.
CPI.
Hot, cold, or just right.
I leave the hot or cold to our fantastic research team.
Do you have an opinion, though, based on all this data that you always have and all the stuff you know? Because you're head of the Institute, for God's sakes.
No, that's true. I think it's going to come in line with what...
You do?
Yeah. Yeah.
All right, so you didn't see any, because I asked someone earlier, what could we know in the last month? I mean, we get the jobs number, that gave us some insight into what this could be.
It did, but again, I think what I really took away from this month's report is the distinction between higher income consumers who are starting to feel the pullback, whereas the lower and middle income households are still experiencing the growth.
Liz, you've been pretty sanguine about any of the things that we've pointed to and said maybe this could be a sign that the consumer is really starting to turn over. Do you still feel that way with the most latest information?
I think, listen, I think we're looking at the data and letting the data drive the discussion, which is really powerful. But again, this pullback in the higher income consumer, given that they are driving more of the spending, is something we're going to keep our eyes on.